Hi everyone, and welcome back to the DDP Property channel. I'm Hannah Gorge, and today we are diving into an exciting topic that many property investors are buzzing about: high-yielding properties. Specifically, we're going to explore why apartments might just be the best fit if you're looking for high yields in today's property market. Now, we all know that real estate has its ups and downs, but one thing that is consistent is the demand for high returns on investment. Whether you're a seasoned investor or just starting, apartments could be the key to unlocking high rental yields. So let's jump in and talk about why. First, let's break down the term yield. Yield is essentially the return you make on your investment. It's the rent you earn in relation to the property's price. And when it comes to apartments, yields tend to be much more stable and in many cases higher than other property types like houses. Why? Well, there are a few reasons. For one, apartments usually have lower purchase prices compared to standalone houses. This means that even if the rental income is comparable to a house, the yield percentage ends up being higher. Lower upfront costs paired with decent rental returns make apartments especially attractive for investors looking to maximize their cash flow. So, what does this mean in practical terms? Say you purchase an apartment in a central suburb for $500,000. And you're able to rent it out for $500 per week. In a year, that's about $26,000 in rental income. Now, if you had spent that same amount of money on a house, you might only achieve a smaller rental income, but with a potentially much higher purchase price. With apartments, you're often looking at better yields for less investment. Another advantage of apartments when it comes to yield is the type of tenant they attract. Apartments, especially in urban areas, are highly desirable for professionals, students, and young families who may prefer the convenience and affordability of apartment living compared to that of a full-sized house. This can mean fewer vacancies and a steady rental income, which ultimately contributes to a stable yield. In cities or areas near transport hubs, universities, and business districts, apartments can remain in demand year-round. This is a massive plus for yield-focused investors, because demand often means less downtime between tenancies, reducing the risk of rental income gaps. Speaking of amenities, let's talk about location and lifestyle factors that can impact yield. Apartments close to amenities like cafes, gyms, shopping centers, and transport options will often attract tenants who are willing to pay a premium for that convenience. Renters are typically more drawn to properties that allow them easy access to work, school, and leisure. So when you're looking for high-yielding apartments, focus on properties with these nearby amenities. But it's not just about proximity to lifestyle perks. Location plays a massive role. Areas undergoing gentrification or infrastructure improvements, like new train lines or revitalized city centers, can see a surge in rental demand. As an investor, this is gold, as these factors can boost your yield and the property's long-term value. Now, let's get real for a moment. Apartments do have some drawbacks. For example, they often come with strata fees, which cover the upkeep of common areas. And yes, these fees can impact your returns. However, when you weigh strata costs against the steady demand, lower entry price, and potential for higher yields, many investors find that the benefits actually outweigh the downsides. In fact, these fees usually fund things that make the apartment more attractive to tenants. Things like your maintenance of the pool, the gym, the gardens, and security. So while it is an added cost, strata can actually support a higher rental price, especially if the amenities are well maintained and attractive to tenants. Let's talk numbers. In general, apartments in Australia have seen yields between 5 to 7%, depending on the location. Comparing this to houses, which might average around 4 to 5%, that is a significant difference, especially if you're building a portfolio where each property's yield compounds your overall cash flow. For example, cities like Brisbane and parts of Melbourne and Sydney, they offer pockets where apartments have yields even higher than 6%. This is because demand for rental properties increases, especially in these urban areas. We're likely to see these yields rise even further, making now an excellent time to consider apartments for your next investment. Another fantastic benefit of investing in apartments is depreciation. Newer apartments or recently renovated ones often have considerable tax advantages due to the depreciation. This allows you to claim deductions on things like fittings, appliances, or even the building structure itself, depending on its age. Over time, these deductions can make a significant impact on your overall returns and make high-yielding apartments even more attractive for tax-conscious investors. Okay, so we've covered a lot today. If you're looking for a high-yielding property, apartments offer a compelling option. They're often more affordable, have steady demand, especially in high-density areas, and they offer tax benefits that can improve your bottom line. And with the right apartment in the right location, you could be setting yourself up for a profitable investment with consistent returns. Remember, at DDP Property, we're here to guide you through finding the best investment properties to suit your personal goals. We specialize in helping investors find opportunities in high demand areas with the potential for both yield and growth. If you found this video helpful, please give us a thumbs up and don't forget to subscribe to our channel for more insights on property investing. And if you're ready to start your apartment investment journey, reach out to us at DDP Property. We'd love to help you explore your options and find the perfect property that aligns with your financial goals. Thank you for watching, and I'll see you next time.